got no money on my mind, got no money on my mind, got no money on my mind.
Hi, I'm Stacy, the money teacher, and let's talk taxes. The good, the bad, and the ugly. Well, I don't know if I have any ugly for you, but maybe you think taxes are ugly, especially if you've waited this long to file. You're almost out of time. Let me try and give you some pointers, some differences between your tax filing last year and your tax filing this year. So we'll start with the good, the child tax credit. Everyone with children should consider filing a tax return this year, even if they don't have any income, because for 2021, the child tax credit is fully refundable. This means that families with eligible children can receive $3,000 or more, even if they don't owe any federal income taxes. In prior years, you had to owe taxes to get the credit, but not this year. Let's look at a bad, the child tax credit. Actually, the advanced child tax credit. Prior to 2021, the child tax credit was received as a lump sum at the end of the year with your tax refund. But in the second half of 2021, the IRS changed the distribution method and paid half of the credit monthly in advance. The result? You may see a smaller refund or even owe income taxes because some of the credit was prepaid. And worse, if you make more than $150,000 married filing jointly or $75,000 single, you may need to pay some of it back. Yuck. So let's do another good. If you didn't receive the third economic impact payment, we call that the stimulus payment, in early 2021, or if you had a child in 2021, you can use your tax return to claim the stimulus payment. All right, another bad. The pause in the student loan repayments made it so that individuals didn't have to pay back student loans. That was good, right? But because you didn't pay back your student loans, you also didn't pay student loan interest. And a lot of people deducted their student loan interest on their tax return. If you don't pay it, you can't deduct it. On average, families with student loans may owe as much as $500 or $600 more in federal income taxes because they lost this deduction. But a good one. On your 2021 tax return, you can claim a deduction for some charitable contributions, even if you itemize. Starting in 2020, the IRS allowed people who took the standard deduction, and most people do, to take up to $300 in charitable deductions for qualifying donations to a charity. This could put another $50 or $75 back in your pocket. Or you could give it away to charity. Bad. Well, good and bad. The robust stock market in 2021, that was good. But it resulted in capital gains inside mutual funds. So if you keep investments outside of retirement, but in mutual funds, and you reinvest those earnings, which you should, that's a good thing to do, then you may have received no cash, but you received a 1099 saying that you have capital gains, and you need to pay taxes on those capital gains. Ouch. Are you an overachiever doing your taxes in January, like me? Or do you put it off? I always thought it was easier just to get it done. Let me know in the comments and click the follow button to learn more about your money.